Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 4th of December 2020, and we're looking at some of Harry Dent's recent comments concerning gold and why he thinks it's going to fall to $1,000. So let's take a look. Now, before we look at what Harry Dent is predicting, just a shout out to yesterday's video. New gold deposits found as prices rise, and Wednesday's entitled Losing My Bitcoin Wallet May Have Cost Me $10,000, both of which are unusual but interesting bespoke stories. And we've placed links to both of these below. But today we're going more global. For months now, we've heard the precious metal pumpers like Schiff, Maloney and Morgan, and many others, even more on the precious metal fringe, talking about $5,000 gold and even $10,000 gold, and goodness knows how high silver was going to go. And all this happening in the not-too-distant future. Well, economist Harry Dent, a name most of you will be familiar with, says quite the opposite. That gold is shortly going to $1,000. Yes, you heard it. $1,000, according to Harry Dent. Let's listen to a brief excerpt from Kitco News during his interview published on the 24th of November, where he made this prediction.
Okay, gold follows two things. It is the closest correlation with inflation. Long term, it only correlates with inflation. Okay, and inflation peaked in 1980, and it's going to go down and keep going down in developed countries, okay? So that's going against it. It also follows the 30-year commodity cycle, peaked in 1920, 1949 to 51, a double peak, and then 1980, and now here again, a double peak in mid-2008 and mid-2011. Gold peaked on the second one. So gold peaked there, came down. Now all this stimulus, gold rallies with this stimulus up to a point because they assume it's going to cause growth and inflation again, because gold primarily correlates with inflation more than anything else. I see gold, I predicted it would crash when it broke 1525. It crashed down to 1050. When it hit there, I said, gold now is oversold, due for a bounce with all this money printing. And now I'm predicting gold will probably... Watch what's just happened. In 2008, gold continued to go up when stocks went down, sensing a crisis, money printing stimulus, which it loves, okay? And in the February-March crash, gold went up in the first 2 weeks of that 5-week crash, went down in the middle of it and came back a bit. Gold ended up down, but not that much. I'm expecting gold to go up into early to mid. When this crisis starts to build next year, it's going to see more stimulus. It's going to go up at first. I have a target of 2,200. That goes through the tops in gold all the way 1980 in 2011. 2,200 is the strong resistance in the coming months. I think gold's going to go up to 200 at first and then crash back down to its 2015 lows around 1,000. And from 2022 on, I'd be buying gold hand and fist. It's going to hold up better than most commodities. And gold is loved by the people who are going to be driving the world economy, Asians, and especially Indians and Chinese, and especially Indians. Indians spend more per dollar of income on gold than anybody in the world.
Interesting, no? However, we have to say, we remember Harry's prediction. He actually quoted that gold would go down as far as potentially $750. And we stated at the time quite strongly that we could not see it falling below $1,000. So we think there's a slight degree of revisionist history there. No doubt once it hit the 1,000, he said, or 1,050, he said something different. But we remember quite clearly him quoting a lower figure than that. And not even our most pessimistic forecasts could have got quite that low. We have tended to think that Harry has on occasion been too pessimistic. However, what about $5,000 gold, you may ask? Well, let's listen to what he says about that to Kitco News.
Yeah, $1,000 is around the bottom for you?
Yes, around 2022. And then, who knows? Gold bugs are saying it'll go to 5,000. I say, yeah. I say, I agree with you when you're dead. So it'll be the next commodity cycle. Again, I'm a cycle guy. Yeah. I can tell you cycles on all types of. Next commodity cycle peaks between 2038 and 40. I will be close to dead, if not dead by then. So I'm just hoping I see gold at 5,000.
You said it's going to rise to 2,200 first, but what's going to take us there? Vaccine news has been clobbering gold prices for the last couple of weeks.
Yes.
And the vaccine's not even out yet, right? It's just news. What happens when it's actually out?
They don't want to see a recovering economy that needs less printing. Gold's been going up on money printing. That's been the biggest driver of it. So if the economy starts to weaken again, gold's going to say, see, just like 2008, gold had a big run in 2008 forward when they started printing money hand over fist. So they're going to react to the money printing in the next round, probably in the first quarter, have their last thing. And again, what caused gold in 2008? It did the same thing. Money printing early on, crisis good. When the deflation set in, remember what I said earlier, gold correlates almost 100% with inflation. It does not want to see deflation, okay? So when deflation sets in, like when Lehman Brothers hit in mid-2008, gold suddenly went down 33%, silver 50%. It was not the safe haven in the GFC. It will not be the safe haven in this downturn either, because this downturn is going to see deflation. That's what's going to drive gold to $1,000, give or take.
Okay, also hidden in there was the fact that he also predicted that silver too will fall with gold, anything up to 50%. Now let's just repeat those important words. Quote, I'm expecting gold to go up. When this crisis starts to build next year, it's going to see more stimulus. It's going to go up at first. I have a target of $2,200. $2,200 is the strong resistance in the coming months, and then crash back down to its 2015 lows around $1,000, unquote. Now, $2,200 is the level that we thought would be the maximum gold could go to this year when it had reached close to 2050. And we were confident it would not go beyond that. Now, we can potentially see it rising a little higher than 2,200, and possibly, if the conditions are right, $100 or $200 more next year. But we do tend to agree with Harry Dent. History has shown us that gold performs best during inflation, not deflation. And this is something we've pressed with you, our listeners, time and time again, producing a series on how well gold and silver correlate with inflation. And there's an enormously high, above 95%, I think I'm right in saying, correlation between gold and inflation. So, providing Harry Dent is right, and not that we do not see inflation, but we see further deflation, the next leg up, we suspect, therefore, will be the time to exit gold and buy back again once the fall has taken place. Now that's on the proviso you believe Dent is right. We shall of course be watching this most closely indeed. Rest assured of that. Meanwhile, just a reminder that we've produced 5 episodes of our Peak Gold series and include links below, and tomorrow we'll be publishing our weekly gold and silver update. We've also put another video on the Richard and Greg channel this morning, and again include a link below. What do you think? Do you agree with Harry Dent, or do you take an opposing position? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.